Unicorns, a common term in the business investment world, describes privately held startup companies with a valuation of $1 billion or more. This term first appeared in 2013 within the venture capital community, coined by investor Aileen Lee, who chose the mythical creature unicorn to illustrate the rarity of success achieved by these startup projects. In recent times, unicorns have been garnering increasing attention, not necessarily due to the level of success these companies achieve, but rather because of the sudden decline in their numbers. According to Nikkei Asia, the number of freshly minted unicorns is plummeting worldwide as investors have become more risk-averse amid concerns about the potential economic slowdown caused by monetary tightening in the US and elsewhere. How have the prospects and situations of these unicorn startups evolved over the past year? What factors have contributed to the significant decline in their numbers? Are there any bright spots remaining for these unicorns? Let's explore in today's World Affairs. With the money spigot running dry, the average monthly number of new unicorns fell to 7.3 companies in the first half of this year, down roughly 80% from a peak of 50.5 recorded for all of 2021, according to U.S. data provider PitchBook. In the U.S., venture capitalists have begun to shift focus to discovering and nurturing promising companies rather than finding investment opportunities for quick gains. In late June, IRL, a U.S. messaging app startup, decided to shut down after it was reported that the company had likely falsified user numbers. The company allegedly violated securities laws after it became clear that it would not be able to meet performance targets it had promised investors. Valued at $1.17 billion in 2021, following a capital injection by SoftBank Group's Vision Fund, IRL once claimed that its app had 20 million active users. Last month, however, a company spokesperson admitted that 95% of its users were automated or from bots. There are many other fallen unicorns, including Zume, a U.S. robotic pizza maker, now in the process of liquidation. The SoftBank-backed startup was valued at $2.25 billion in 2018. Unable to meet earnings goals, many one-time unicorns cut back on operations and workforce, eventually folding business after running out of cash. In 2021, the world witnessed an average monthly birth of 50 unicorns, mostly in the US and China, according to PitchBook. The number of unicorns increased sharply as SoftBank's Vision Fund and other investors poured money into later-stage startups. Investors play different roles in the growth stages of young companies. Seed-stage investors help startups get off the ground, while those in early-stage companies offer financing to help them establish business models. Later-stage investors assist with expansion in output and market share. During the go-go years of the unicorn boom, some investors joined the dance to make quick profits from initial public offerings of their investments. The situation, however, drastically changed once the U.S. Federal Reserve began to raise interest rates in the spring of last year. In 2022, IPOs raised a total of $22 billion in the U.S., down more than 90% from a year earlier, according to U.S. financial data provider Dealogic. In March 2022, the peak of the frenzy in fundraising for startups was estimated by Forbes to have amassed a combined wealth of $190 billion for 44 founders of unicorn companies. 1 year later, with the decline of cryptocurrencies in private market overshadowing their counterparts, the valuation of unicorn companies backed by global billionaire supporters has been re-evaluated. As per the findings, half of the assets of the billionaire backers of these unicorns have been wiped out, resulting in this visionary group of top-notch startups losing $96 billion compared to a year ago. Several unicorn companies have revalued themselves downward. Online payment startup Checkout.com proactively lowered its internal valuation to $11 billion in December. This move caused the net worth of its founder and Swiss tech entrepreneur Guillaume Posas, the richest tech entrepreneur in Europe, to plummet from $23 billion to $7.2 billion in a short span. Investment remains stagnant this year as monetary tightening has made investors reluctant to take risks, with many shunning shares of struggling former unicorns that have gone public. Unable to recover their investment with IPOs, investors trimmed their investments, dealing a serious blow to many unicorn hopefuls. PitchBook says venture capital investors in the U.S. spent a total of $39.8 billion in the April-June quarter, down 48% on the year. Regarding the sectors witnessing the most significant decline in the number of unicorn companies, analysts at CB Insights have pointed out the financial technology fintech sector. Following fintech, the retail technology sector has also experienced a substantial decline. The digital health sector, on the other hand, has remained relatively stable. But some venture capitalists in Silicon Valley remain optimistic about the startup market. Capital and opportunity are polarizing, said Lu Zhang, founder of U.S. venture capital company Fusion Fund. Top-performing companies which are able to raise actually are getting more capital than the average of 2022. She also pointed out that a lot of serial founders come out to launch new companies. Those founders are among the highest quality in Silicon Valley. They've been observing the market for a long time, and now is a good timing for them to jump in. Optimism in generative artificial intelligence is on the rise. Inflection AI, a startup launched last year by LinkedIn co-founder Reid Hoffman and others, has already raised $1.5 billion since its inception. Data from U.S. research firm CB Insights show that North American startups dominate the top valuation rankings of generative AI unicorns, with Chinese businesses nowhere to be seen. While later-stage startups flounder, seed-stage brethren continue to attract investment in the U.S. The median size of seed deals in the first half of the year reached $2.9 million as investors focus more on nurturing next-generation businesses. Martin Pitchington, co-founder and co-president of U.S. restructuring company Sherwood Partners, sees a great unwinding underway in the startup sector. I see a lot of new and exciting things coming out of AI, but we've got to clean the old, get rid of what's there already, and save our money to build new things, Pitchington said. In the past, the startup ecosystem spawned new industries whenever it encountered difficulties, such as the IT bubble and the global financial crisis following the collapse of Lehman Brothers. Venture capitalists around the world are watching what will come out of the current travails of unicorns and who will lead the next trend.